Here's a question for you. Is now the time to buy a house? And also, what do you need to know before you start looking? Joining us this morning, the no bull agent, Ken Kaplan. How are you, Ken? Good to see you.
Morning.
Okay, first of all, this is going to be a two-part series on buying homes because people, as you know, have so many questions when they're looking to buy a home. The first one, obviously, can I afford to buy a home? How do you find out if you can actually afford it?
You need to speak to a lender. You know, go to the banking institution that you work with, that you keep your money with, that you do your checking or savings with. And then I would say also talk to a mortgage broker. Talk to 2 or 3 different lenders.
Right.
See what's the payment really going to be? And how does it impact you in the way of your taxes?
Right.
Talk to your tax person. What kind of write-off are you going to get? Maybe it makes more sense to buy a little bit larger house so that you've got more of a tax break because at the end of the year you're going to get money back.
So people want to know, how much money do I actually need to have in the bank to buy a home? There are a lot of programs, there are different types of loan structuring that people can do. So how do you find out if I actually have enough in the bank to buy a house?
You need to sit down with the loan person. You need to sit down with the real estate agent. You need to figure out, okay, what do I need? What's the minimum down payment loan that I will qualify for?
Right.
Or
Right.
do I want to put up more money so that I've got less payment on a monthly basis that's affordable? But you have to take into account, what am I paying in rent if I'm a first-time home buyer?
Exactly.
How do I transition into that purchase? I need at least, if you're not a veteran, you need at least probably 3% down, maybe 3.5% down if you're going to use an FHA loan.
Right.
But Fannie Mae, as we talked about, has come out with this 3% down loan, which is phenomenal. And FHA just lowered their MI rate.
And those types of loans, obviously, this is where you go in, you ask the questions and see what's best for you, what fits you.
And I would just say this, make every lender that you talk to, every lender that you meet with, give you what's called a GFE or a good faith estimate. So they give you a breakdown of exactly what your costs are going to be. I mean, like very, very close, so that you know you're not going to be in harm's way and you're not going to be living, I would say, house poor, if you will.
A lot of people are scared that they're not going to qualify for any of these loans, or there are different requirements for that.
There are. FHA loans are a little bit, I would say, available and probably have a bit more forgiveness in the way of debt-to-income ratios as well as credit scores. So there is really now where there wasn't 2-3 years ago.
Right.
There are now plenty of avenues for buyers, whether they're first-time home buyers, whether they're buying a second home, whether they're buying investment properties. Those avenues have opened up because the banks have now become a little bit more forgiving in qualifying individuals for loans.
People talk a lot about your credit score, but that you mentioned the debt-to-income ratio is a huge factor in whether or not you get a loan. So that's something you got to look at.
You need to be honest about
what percentage is, because usually you think, well, 25% or 30%, 33% of what you make is what should go into housing. Does that number?
For so many years, it was okay. Don't pay more than 25% of what your monthly, what your monthly gross income was towards it. It's changed because the housing market has changed and it's become less affordable than it used to be. And between inflation and everything else, you just got to be careful that you're not getting in over your head.
So, what percentage are we looking at now?
I would say if you want to be safe and really be safe, take 35 to 40%. I think that's probably, that's the most that you want to go to, I would think. But everybody has their own comfort range. Everybody, not everybody feels the same way that I do. I play it a little bit more conservatively. I would say to clients, just be cautious.
Right.
Don't take the lower interest rate teaser rate unless you think for sure, without certain, without any reservation at all that you're going to be there for, let's say, a 3-year note. Take a 5-year note just to be safe.
Right.
Other than that, take a 30-year fixed note. Play it safe. Don't put yourself in harm's way.
Playing it safe is smart. The benefits of purchasing a home, because, I love this whole conversation. I always tell people when they're renting and they're paying a certain amount in rent, I said, why don't you try to take one of these loans and buy a home?
Right.
The benefits of buying versus renting, just the basics of that.
Okay, so renting, essentially, you're sending your landlord to Hawaii every year, and that's that's kind of the old joke. But the truth is, you're not gaining any appreciation in rent. Now, on the flip side of that, if you're not going to be here long, let's just say you're here in the Navy and you're here in the military, you're only going to be here, you're here for a year and a half, 2 years, maybe it doesn't make sense to buy because you're not going to have enough time to ride that market. I say if you're going to buy, you need to make sure you're planning for the long term. Plan on a 5-year hold. That way that you've got enough time to weather the ups and downs of the market. But the benefits of buying truly are, for most first-time home buyers, are the tax benefits.
Sure.
Most individuals don't realize, and I'm not a tax professional, so I can't give that advice, but most people don't realize that that interest rate, that they're paying on a monthly basis is most likely going to be tax deductible for them.
And then you get something at the end of the year,
and then you get and the appreciation. As long as you're in long term, think about the long term appreciation. And if you don't sell it, keep it as a rental. Lock in the low rate now. Then the time it comes to buy a second home where you've got to move, keep it as a rental, and then rent it out. Somebody else is paying off your mortgage.
Somebody else. That's the key right there. Okay, finally, last question here is a lot first-time home buyers. They may not realize that it's quite a lengthy process. It could take sometimes 30 to 45 days to finalize.
And that's once you've found a property and you've had a fully executed offer. Figure it's going to take you 30, 60, 90 days to at least go out there, house hunt, find a property. Don't be scared if it happens in the first week. Don't be discouraged if it takes 6 months to find the right property. But don't buy the wrong property just because you feel like you're getting pressured into it.
It's the biggest decision and the biggest purchase for most people.
It is.
So it's very important. You'll be back next week.
I will.
With more on buying that house in the new year.
How to interview an agent.
Yeah. That's important too.
Yep.
Interview this guy.
Yeah.
Huh? Ken Kaplan, the Noble Agent. Thank you as always, Mr. Kaplan. We appreciate your insight.
My pleasure.
All right, let's get you over to Chrissy Russo.